So the big news out of August is the Reserve Bank holding the cash rate at 4.35%. The big drivers around this was inflation actually came down to 3.8%, which is good news, not where the RBA likes it to be, in between that 2 or 3% band, but definitely heading in the right direction, and unemployment holding steady at 4.4%. Now, this is a big number that the RBA watches. If inflation goes up and they've got a little bit less to pay their debts or pay their loans, it's a little bit of a problem. However, if they don't have a job and they can't pay their loans, it's a big problem. So the RBA's got a very close eye on that. We're talking to business on the ground every day, and I think that unemployment number will rise over the coming months. It's probably a little bit more prevalent than we'd all like, but definitely something to watch. And to give everyone some context, the RBA cash rate was sitting at 4.35% only in January 2025. And if we look back, and those of us were lucky enough to be in the industry then, in August 2008, cash rate was actually 7.25%. So although it crept up 3 times this year, it's not as bad as what we've seen. And all the talk now has switched from rises to possibly a hold or a drop coming, but most aren't predicting that until next year. Competition between lenders is heating up. So we're getting the emails and the calls from lenders at the moment offering special pricing or under the table deals for good clients, which is a sign that their business volumes have reduced a little bit, but a great opportunity for people to make sure they get a good interest rate. We're also seeing lenders loosen policy. So the latest being rental income. So some of them are looking at shading rental income a little bit less than what they have. And also loosening the policy around first home buyer savings requirements. So whenever lenders are looking at pricing and looking at policy, the key there for them is they're trying to boost their business because they have seen slightly reduced volumes. Great time for people to get in, make sure you get a good interest rate. Many people are looking at now as a great time to buy. So open home numbers from real estate agents have definitely decreased, so less people around looking. SQM research also tell us that there's 12% more properties on the market in July than what there has been. So you've got more options, less competition. The old adage of be greedy when everyone else is fearful has really come into play now. So people that have got the ability and confident in their position and their borrowing capacity, now's a fantastic opportunity to look at buying, especially if you're looking to upgrade. So if the market has come back a little bit in your area and you're going from that property that's $1 million up to $1.5 to $2 million, if the market's come back 5 to 10%, well, you're making money in that upgrade. So if you are looking to upgrade, now's the time to have a look. So most lenders are reporting a drop in volumes of between 15 and 20% up to the end of June. So we're seeing that turnaround time for lenders be very fast. Most lenders we deal with, within a couple of days, they're getting back to us, some even faster. So that's providing an opportunity for people is if you're looking to secure a property, you're in a heated competition or a multi-offer scenario, you can reduce that finance time down to make your offer look a little bit more attractive. So typically in Queensland, we see a 14-day finance clause. If you're in a competition, a 7-day finance clause is possible and easily achievable as long as you've got all your ducks in a row up front, and that can be the difference between you getting the property and possibly missing out. Another area that's boosted in interest since the budget is commercial property, so both for owner-occupied or investment, but inside and outside super. So typically, commercial lending has been a little bit different to residential, shorter loan terms, 15 years as opposed to 30 years, and a little bit higher interest rates. But in the last 5 or 6 years, we've seen lenders adjust that lending in commercial, especially in the lower bracket, so 1.5 mil and less, where it starts to look a lot more like a home loan. So that a lot of them are doing 30-year loan terms, up to 80% loan to value ratio. So it makes that commercial property finance a little bit more affordable, and interest rates are definitely in the 6% range for commercial. The other area for commercial that most business owners are looking at or have considered is using their super money or their self-managed super fund to be able to buy their premises or commercial property. We had that ban on residential property just come in through SMSF, but commercial properties are still all systems go, and a lot of business owners are looking to secure their tenancies.